and hello to everyone watching on the live stream, wherever you might be. Actually, you should really be here in sunny London and in this brilliant venue. So as punishment, you'll get to ask questions to the Minister, but after questions for people in the room, because quite rightly, you've made the effort to come here. And seriously, I want to thank UK Finance for hosting us, and to Jonathan and Emily from UK Finance for making it possible. This is a Bright Blue and Virgin Money event on the future of finance. For those of you who don't know Bright Blue, we're an independent think tank that seeks to defend and improve liberal society, and I am the chair of it. We believe in a liberal, meritocratic, pro-market, institutionalist and internationalist Britain. And one of our core projects this year is about helping people from more modest backgrounds acquire assets. Earlier this spring, we published a report with ideas on how to do just that. We know, especially in today's economy, that it is income from assets rather than just income from work, which is essential to achieve meaningful social security and mobility. Assets are a cushion to fall back from in hard times and a cushion to spring forth from to take risky decisions and investments that yield long-term benefits. But the level of asset inequality in the UK today is alarming. Just look at the housing market. Home ownership has plummeted so much that in Britain today, someone under the age of 35 is now more likely to live with their parents than a partner. And in London, in the southeast in particular, it now seems only those with wealthy parents can afford to get onto the ladder. Hard work now doesn't seem to be enough. The public can see and feel that we are becoming an inheritocracy rather than a meritocracy. And that puts Britain in deep, deep trouble, for it is open, industrious and innovative economies that drive national prosperity. As the great American president Teddy Roosevelt said, ruin in its worst form is inevitable if our national life brings us nothing better than swollen fortunes for the few. Government can and should do more, of course, but so can finance. For finance is the fuel of individual and corporate success. It provides the products and services that allow individuals and corporations to borrow, save, invest, and trade. Finance enables people to acquire, accumulate, leverage, and draw down crucial assets. Finance, of course, is one of this country's most major success stories. It's an industry that needs celebrating and enlarging, not one that needs cutting down. And making the UK the most globally competitive country for financial services and talent should be non-negotiable. But UK finance is facing change and needs to change. New regulations following the global financial crisis, new frictions following Brexit, and now the AI revolution. If it is smart, UK finance can invest in and embed in their organisations the wave of innovations that are starting to come that will be transformative. There is big long-term prizes for UK finance if it adopts early and, most crucially, invests early in the lives of individuals and organisations when they need that finance the most. So we're delighted and very grateful to have the Economic Secretary to the Treasury, Bim Afolami, with us today to talk about his vision for the future of UK finance. Just a few administrative things. The first is timings. We're going to go on for about an hour and then have some refreshments afterwards, so please do stay. If you're tweeting, please use the hashtag #BrightBlue, and if you're wanting to ask questions via Slido, you can do that. If you want to ask questions through the live stream, you can do that via Slido, which is just below the link that you are watching. And finally, we're very grateful to Virgin Money for today's partnership, and particularly to Tamara and Una from Virgin Money. And I'm now very interested to hear from Morgan Bone, who is their Head of Corporate Affairs, who also is going to introduce the Minister.
Thank you. Thank you to the Economic Secretary and to all of you in the audience for joining us today, and to Bright Blue and UK Finance for making this event possible. As we look forward towards a general election, today's event presents an opportune time to discuss what the future could hold for the UK's financial services sector. Well, I know that you're all here today to hear from the Economic Secretary about his government's future vision. I wanted to share just a few reflections from Virgin Money about 3 areas where we believe both policymakers and our industry as a whole could usefully focus efforts. The first is on evolving technologies. I think everyone in the room would agree that the future of FS is increasingly digital. Innovations in AI, in payments, and in back office functions have the power to transform banking and significantly customer experience. We, like many others in the room, are already seeing benefits for customers in this area. But moving forward, we believe AI will also be a powerful tool in helping to address threats such as cybercrime and fraud. But evolving technologies are not without risk for everyday consumers and society more generally, and their adoption needs to happen in a managed, conscious way. Secondly, digital inclusion. As financial services, like many other industries, is becoming increasingly digitized, it is more important than ever to find solutions for the 11% of society that is currently digitally excluded. To help address this at Virgin Money, we have turned all of our stores into data banks, where anyone experiencing data poverty can receive a free SIM card with 25 gigabytes of data every month for up to 12 months. We're also supporting device donation and digital skills training in the communities that we serve. But moving forward, we would like to see more coordination from government and industry that reflects the inextricable link between financial and digital exclusion. This would not only promote digital access and capability, it could also help to ensure continued innovation for the cohort of citizens that want to engage offline, such as the Banking Hub initiative. Thirdly, consumer protection and right regulation. With evolving technologies, there will also be evolving ways for criminals to commit crime, and it is our responsibility as a sector to protect our customers as far and as much as possible. But with the sector evolving, it is only right that regulation evolves with it, by placing both people and wider society at the core of its development. This will ensure the protection of the safety and security of citizens as we embark on the path to becoming an AI-enabled economy. I know that the Minister and his team have already put a lot of time and thought into many of these points, and I, like you, very much look forward to hearing about his future vision for financial services in the UK.
Well, good afternoon, everybody. Morgan, thank you for that very kind introduction. And it is a pleasure. It's a pleasure to be here with all of you to talk about finance, because finance really matters. Financial services, as we've already heard, is the #1 industry that the United Kingdom has. And so I'm obviously very privileged to be able to do this job, having had a career in the city before I went into Parliament. But financial services doesn't just matter for pounds and pence, it matters as a fuel to help fuel the whole broader economy. And it's that connection is what I really want to talk about today. Now, the last few years have not been easy for the British economy. We face the legacy of COVID, war in Ukraine and the Middle East. These challenges have made life tough for so many people here in Britain. Since the beginning of 2023, we've been working on 5 main priorities, 3 of which are economic: halving inflation, growing the economy, and reducing debt. We made good progress on all of those. Inflation's fallen from 11.1% to 3.2%. The economy has performed better than forecast, as many of you would have noticed only with data that came out only the other day. Wages are rising above inflation. Mortgage rates are down significantly from their peaks last year, and the economy has outperformed European neighbours, and debt is on track to fall as a share of GDP. The job is not done. We're not complacent at all. But because of the progress we've made, the economy is turning a corner. But today I want to talk about the progress we have made collectively on financial services over the course of this Parliament. Because this Parliament, I believe, has truly been a Parliament of success. Over the last 3 years, my predecessors at the Treasury and I alongside the Chancellor and Prime Minister, have embarked upon the most comprehensive set of reforms to financial services since the 1980s. I'll be honest with you, we haven't been able to do everything that I'd have liked to have done and be able to do it as quickly as I'd have liked to have done it. And there are things, important things, that we need to do much more on. But when you take a step back and look at it all, I'm confident that we are, hand in hand with industry, many of whom are represented here today, successfully delivering a new model for the UK's financial services sector. A model that is open to the world, which embraces the challenges and opportunities of tomorrow, and which is firmly at the heart of a modern, dynamic British economy. And it is our hopes and plans for this new model that I'd like to talk to you more about today. Underpinning all my thinking in this is a clear assessment of the fact that our country cannot significantly increase our economic growth rate, which is what we all know we need to do, without a growing and thriving financial services sector. Now, of course, to understand where we are now, we've got to understand where we've come from. And those of you that know me know that I love history. And so when thinking about this speech, I started thinking about the history of the City of London and our financial services sector and how it's evolved over time, because how we see it here today is not how it has always been. The booms, busts, bankruptcies of the last 2 centuries are lessons in the capacity of individuals, governments, and institutions to change the course of history. After the golden age of the late 19th century, the trauma of the Great War, First World War, and the decision to return to the gold standard, by 1929, the square mile and the wider economy in this country was in deep trouble. The typical British response, a committee was set up. And it was called the Macmillan Committee. And it was set up to look after one of the members, Lord Macmillan. And it was set up to look at the financial sector. Because, as David Kynaston, who's written a fantastic history of the City of London, says in his book, and I quote, "Not just the city, but capitalism itself was on trial." There was a perception that the city existed only to finance imperial and global trade, and that the city and the financial services sector in London was neglecting the support of British industry throughout the regions of the UK. This was a report 100 years ago. Please, that shocked me. This phrase, capitalism is on trial, has stuck with me. Because in 2024, nearly a century on, as I've said, I'm struck by how the health, or the perception, should I say, of the health of the financial services sector remains intertwined with the perception of the health of capitalism and our economy more broadly. This is why I think it gets its front page news. It's not because people really care necessarily about what a hedge fund is doing, or what a bank is doing, or what an insurance company is doing. I mean, people in this room care, but guys, we're a small group, okay? It's not because generally that matters, people think it matters, it's because of what that says about the broader health of the British economy and the relationship between finance, industry, government, and regulators. Back in the 1980s, before the Big Bang, it was adapt or die, because the rules of the game were being rewritten all around us. Now, taking account of both the post-crisis reforms and our current set of reforms, so post-crisis I mean post-2008-9, and our current set of reforms in this Parliament, we have actually rewritten the rules. We are adapting successfully in the face of change and challenge. But we shouldn't forget the need to continually capitalize on our uniqueness in this country. The UK is the one place in the world, one financial services sector in the world, where everybody feels they can transact and they'll get a fair shake and they can get a fair deal. Everybody from the Far East, the Middle East, America, North and South, Africa, Asia, and Europe. There are other financial centers, of course there are. New York, emerging center in the Middle East in Dubai, Singapore, Hong Kong, and they all have their strengths, but they do not have the breadth and depth that we have in this country. But to maintain our uniqueness, we must remain highly competitive and continue to adapt, taking a different approach to our EU counterparts where necessary, updating where we want to go further, better and faster than we could when we were in the European Union, so that as we approach the second quarter of the 21st century, we can confidently showcase a new world-leading model for financial services, one that is fit for the future. So what's in this model? At Mansion House nearly 4 years ago, the now Prime Minister, then Chancellor, set out a vision for the financial services sector. Put simply, he set out a vision which presented a sector that would be technologically advanced, open, sustainable, and competitive. One that builds on our history, including both the Big Bang deregulation of the 1980s and the care that we've taken since 2008-9 to embed and protect stability in our banking system in particular, whilst also looking forward to the future. We're delivering this vision through the Edinburgh reforms in 2022, the Mansion House reforms last year, and the progress made autumn statement last year and the spring budget only a few weeks ago. We are also global leaders in the regulation of new digital assets, ensuring innovation and consumer safety go hand in hand. The Financial Markets and Services Act 2023 is the cornerstone of our reform programme, and a lot of the secondary legislation that comes out and you'll read about or hear about, that's all derived from that act. The act cements in law a growth and competitiveness secondary objective for our regulators. Pretty unusual if you actually compare us to other major financial centres. And this growth and competitiveness objective, I hope, will precipitate a cultural shift in our regulatory approach. With our country, alongside many other countries in Europe and across the West, having the profound problem of slower economic growth than we would like, there is no point us having the safest graveyard. Growth and competitiveness has to be at the heart of what not just industry, but government, and yes, what the regulators do on a daily basis. Now, I know that some, in fact, looking across the room, some people in this room have questioned whether this objective will go far enough in creating a pro-growth regulatory mindset. I don't want to jump the gun on this and say that it has or it hasn't. I want to monitor how the new system beds in for now. The regulators have only had coming up to a year with this new objective, and it's only fair that we give them a chance to meet this new objective, and they're going to soon be reporting on how they are implementing this objective in the coming weeks and months. But be assured that we will go further if needed, if things are not happening and developing in the way that we would all like to see. But I also want you to be assured and to have confidence in the steps that we have already taken, and that the change will come and the change will be brought about. And if I were to isolate on one particular reform that I'm particularly excited about, it's called PICES, which is an acronym which at least vaguely makes sense, which is called, it's the Private Intermittent Securities and Capital Exchange System, which we are establishing this year. What does that mean? It is a world first. Nobody is attempting anywhere what we're attempting here. It will give private companies access at particular times for a particular percentage of their business, access to public capital markets, and create regulatory coherence between the public and private market, which at the moment in law and regulation is completely separate. It exemplifies how we are on the front foot. Because the reason why we brought this about isn't for fun. We brought it about, we're bringing this about this year because there has been a structural shift globally from public markets and public capital to private markets and private capital. You can't fuck the market, as Margaret Thatcher used to say. You can't change those structural shifts. But what we've thought is, how do we take advantage of these structural shifts rather than allowing ourselves to suffer as a result of the world changing around us. Alongside this, we are taking forward Lord Hill's listing reform recommendations. This includes a complete rewrite of the UK's prospectus rules, creating tailor-made rules that make it easier for companies to list and raise capital on UK markets. Now, all of these reforms will strengthen the operating environment for our capital markets, fundamentally, because it will increase the confidence of people to invest in our capital markets, which will increase the pool of investors with a stake in UK markets and enable firms to raise larger amounts more quickly. We're also implementing a move to a T+1 settlement by the end of 2027, in line with the recent recommendations of the Accelerated Settlement Task Force. So look, there's a lot here, there's a lot to celebrate so far, but it wouldn't be a particularly interesting speech if I wasn't also challenging and say, what more do we need to do? We've done a lot, but there's a lot more we need to do. And indeed, I should say, the Chancellor would update the country on our vision at Mansion House this summer. In my mind, there are three major challenges that we need to go further. The first is we have a challenge on pension funds. UK pension funds do not invest enough in unlisted equity in the UK. And that's not just my judgment or the Chancellor's judgment. That is when we compare British pension funds to international peers, like in places like Canada, or indeed Australia, where better returns for pension savers are being generated with effective investment strategies and more investment in high-quality domestic growth stocks. For defined contribution schemes specifically, comparable Australian schemes invest 10 times more in private markets as a proportion of their total assets than equivalent UK pension funds. Okay? 10 times. Alongside this, UK pension fund holdings in UK listed equities have fallen. Listen to this. In 1997, they were 53%. 53% of their assets were in UK listed equities. Now, it's 6%. So, we are introducing new requirements for defined contribution, DC, and local government pension funds to publicly disclose their level of international and UK equity investments. If there's not improvement, as the Chancellor said in the spring budget, we will then consider what further action should be taken if we are not on a positive trajectory towards international best practice. Higher investment levels in these asset classes are not, this isn't just about the City of London, it isn't just about companies, it's about people. And it's about the fact that if we have higher investment levels, that will help improve returns for savers and promote economic growth in this country by unlocking billions of investment for high growth companies. And by doing so, also, it will help our capital markets to thrive. Now, part of the fundamental issue is that the pension market is too fragmented. So we're taking steps to improve consolidation of the market, particularly the local government pension scheme, as well as ensuring that the regulatory structure rewards funds that invest for long-term returns and see long-term value, rather than always just thinking about cost. Because value for long-term, for savers and businesses and for this country's economy is what we all need to be driving for. And in addition, we're developing vehicles that ensure that pension funds have access to high growth assets, including in the science and tech sectors via the LIFTS initiative, which we announced the winners of at the spring budget. To this end, the package the Chancellor announced last year at Mansion House, including the Mansion House Compact, will unlock up to £75 billion of financing for growth by 2030. So that's the first challenge, pension funds. Second challenge, these are demographic and regional inequalities in our country. I've been thinking about these issues a lot recently, and we just cannot shy away from these challenges. I've talked a lot about how we need to grow the economy. The pie needs to get bigger. But how that pie is distributed, how that pie is sliced, really matters. Let me just take one area of this that I've thought a lot about. Securing access for small and medium-sized companies for finance is particularly challenging for for certain groups. It's particularly challenging for women. It's particularly challenging for people from ethnic minorities and for people from certain social classes. And the statistics speak for themselves. For example, only 8% of total equity funding is being invested in teams with at least one ethnic minority founder. This is compared to an ethnic minority representation in this country of 18% as a whole. And if you were to look at people, say, under the age of 50, which is where most companies are going to be started from, that percentage of ethnic minorities is much higher. Yeah? And the proportion of equity capital investment going to all female founder teams, has been stuck. I couldn't believe this stat. I actually had to go and look this stat up because I didn't really believe it when people told me. It is 2%. 2. Okay, so 98% going to non-female founders, 2% going to all female founders. And that has remained stuck for a decade. We haven't actually made progress. We're working to address this in government. Since 2012, of the people who received a startup loan from the British Business Bank, which is funded by the government, 40% went to women, 20% went to those from ethnic minority background. In March this year, the Prime Minister announced a new task force to boost private investment in women-led businesses and announced an ambition to make the UK the best place in the world to be a female founder. When I delivered my first major speech as City Minister last November, and in much of my engagement since then, I've wanted to keep at the front and centre of people's minds that reforms must deliver investment all over the UK. So it's not just the characteristics and the demographic characteristics of people. We've got to make sure that where we are successful and all the reforms that government's putting in, or the hard work from industry, that distribution is happening in all parts of the United Kingdom. Financial services has, for far too long, and very incorrectly, frankly, has been seen as too London-centric, even though, and I'm sure UK Finance will thank me for pointing this out, 2/3 of financial services jobs are based outside London. Now, I've never believed, as a free market conservative, I've never ever believed that success comes trickle down from the centre and the top. You know, George H.W. Bush used to call this sort of thing voodoo economics, right? That isn't how success and economic growth works. What happens is, to really have successful financial services sector and a broader economy, it needs to be bottom up from all parts of the United Kingdom. I commend the individual efforts that companies have made to increase their regional presence, and that has happened with, before I went to Parliament, I worked for HSBC, and one of the jobs that I did was helping establish HSBC UK in Birmingham, and that's just one example of a lot of good work that's been done in the sector. And they've really tried to improve how they've done that. But I'd like to extend a call to arms for bankers, insurers, pension providers, and others to take up the mantle on regional growth, to deliver ambitious investment strategies in our regions and publish them, be transparent about them, so that we can work together to see how we can do more. Delegate more hiring decisions to local leaders, local managers, not just center all the HR in London. Because actually, when you do that, you develop much more local talent. And I'd also encourage the banking sector to roll out banking hubs much faster across the country, to support local communities and local businesses, and being a presence where bank branches may shut. When you've got more banking hubs in different parts of the country, people will feel more connected to the financial services sector. As a country, the financial services sector will not get the public support that it needs in order to thrive without much more engagement from more people. And more broadly, this question of engagement is crucial. How do we get people to engage in the evolution of financial services going forward? One answer is to show them how it affects them and why it matters. I was struck when Ryan was talking earlier about Bright Blue's focus this year on younger people and how younger people need to build more assets. I completely agree. And it's one of the key things that we need in government to work much harder with the industry and with the public and as a society to improve that, because I think it's absolutely critical. But one other way in which younger people can get access to more assets is because younger people in this wonderfully entrepreneurial country of ours start a lot of businesses. And they start small businesses because all businesses start small. And how do we improve their experience? Now, open banking, which many of you will be familiar with, put consumers at the center of data sharing and the benefits of that data sharing. Last month, I launched the Open Finance Task Force, which is looking at, for example, how sharing data sets, by the way, doing this with people's permission, with privacy absolutely paramount, because we can't compromise on that, but sharing data sets can help facilitate the availability of finance for those small and medium-sized businesses that people start up all over this country. And this task force, I've set them a pretty tight deadline, tight time frame, weeks, not months, and I hope that we'll be able to publish the findings of this task force this summer to set out how we feel that this data sharing can unlock growth in providing finance and then companies providing finance to SMEs. We led the way internationally with open banking. Sharing data with consumers and businesses has the power to empower consumers and businesses across the spectrum: savings, investments, insurance, pensions, and beyond. So let's continue with that agenda. So to conclude, I hope you'll not mind me referencing a report I wrote. Actually, I didn't write it, actually. Somebody helped us write it. I worked on in 2022 when I was chairing the APPG on financial markets and services. In this report, we said that financial services are not just the jewel in the crown of the British economy, as I said at the beginning of my remarks. They are critical to the effective working of the real economy. Why? Because financial services are a part of, not apart from, the rest of the economy. This is our model for the future, because capitalism, the economy, society, communities work better when there's genuine partnership. Let's continue building this genuine partnership, and collectively we will reap the rewards. Thank you for listening to me this afternoon. It's an absolute pleasure. Thank you.
Great, thank you for that very thoughtful speech, Bim, and for kind of setting out what you think are the challenges and the priorities in the years ahead for reform of UK finance. I'm going to grill you now.
Go for it.
And then I'm going to open it up to...
I'm going to tell you a story quickly about Ryan first.
No,
just because...
Don't make it too personal.
No, it's fine. Just because I knew Ryan Shorthouse when we were in our early 20s in London, and we were both part of another think tank. And he got fed up with his think tank, and I did. And I was going off to the city, and I didn't really have any time to continue doing all this work. And Ryan said he was going to set up a new think tank. And he set out, and the way he described that new think tank was almost word for word how he described it when he started. And it is amazing to see what you've been able to build, which is very good. Congratulations to you.
Thank you, Ben. That's very kind of you. I'm still going to grill you, unfortunately.
It's worth the try.
So you talked about capitalism being on trial. And we've seen in this country in particular, also in America, lots of young people, which for selfish reasons I count as anyone under the age of 40. A lot of young people are turning away from centre-right parties.
Yeah.
And it seems to be quite unique in America and the UK. And is that because of the Conservative Party, and it's been 14 years and people are fed up with it? Or are people turning away from the capitalist economic model? Are younger people, do you feel, do they have more socialistic values? They're less interested in enterprise and capitalism?
So look, it's a very interesting question. And you're right that what's happening in the UK is not the same thing as happening in Europe, for example, where it's actually the opposite. And I've done some work on this. I'd say it's really, three things. The first is what's happened because of our cultural heritage, particularly around property ownership. I think that, frankly, a lot of the reforms put in place post 2008-9 did make it harder and for first-time buyers. And we saw that happening in the UK and the US more than you saw it in other jurisdictions. And I do think that that's had an impact on how people view the whole system full stop. Okay, so I think first-time buyers having things a bit harder than they used to, it's had a big impact. Secondly, earnings. Right? One of the reasons why we're so passionate about cutting national insurance for working people is because that goes to the people who really need it. And people's earnings over the last since the financial crisis, frankly, haven't gone up at the same rate that they did in the years before the financial crisis. And if you put in place that at the same time as making it harder for people to get on that property ladder and the cost of assets going up significantly, you just have an opening delta, right, which make things harder and harder for people to get on. So I think the earnings connected with housing is a key second reason. And the third reason, I think, is the point about the system. And we just have a very, very difficult situation where if people do not feel that they have a stake in society, the government, and it's because we have been in government, I don't actually think this is a right-left thing, whoever is in government, people will somehow perceive that it's their fault that they don't have a stake. So I think that but this isn't just housing. Let me take an area from my brief. Share ownership, okay? Retail share ownership. The percentage of people who own shares directly has halved in the last 15 years. It's halved. That's just a lot. That's millions of people who no longer have that direct relationship with what's going on with the financial pages, what's happening with the FTSE, or what's going on with this business or that business. This stuff is all divorced from them. So I pick that as one area where people can have a stake. I think we've got to do a lot better. And one of the reasons why reforming the capital markets matters is not just because capital markets allocate capital well, which they do, and they provide positive for the broader financial ecosystem. When you can give access to more people to companies that grow fast, that means their wealth grows. And it's tragic that if you really want to make money off owning a business in this country, if you yourself don't own the business yourself, you've almost got to be rich enough to invest through a private equity fund. Because if you've invested in a private equity fund over the last 15, 20 years, you've done very well. But how many people are rich enough? How many people in this room are rich enough to own interest in private equity, right? So we've really got to revive our capital markets for retail investors to make sure that ordinary people benefit from when companies do that.
You talked about property, and lots of people on the centre right say we just need to build more houses. That's the solution to make housing more affordable. It's part of the solution. But in this country, a lot of money, savings, time, focus is on getting a property. And in many ways, we're very leveraged. Some say over-leveraged in property compared to other investments. But on the demand side, since the financial crisis, obviously the regulations have become tougher about who you lend to. And so as the prices have gone up, the deposit that you need is much higher. And that's now, from surveys I've seen, the biggest barrier. So is there a need, a lot of mortgage companies say, look, we're quite restricted in how much we can give. There's rules around 4.5 times your salary, a little bit more lax around if you earn above 100K. But are those regulations not really, are they, compared to other countries? I think you can lend a lot more in other countries to people. And, a lot of mortgage providers say, look, we're basing it on someone's salary now. We know in 10 years' time, their income trajectory might be completely different. Should we be thinking more radically around the mortgage market and the rules around that to help housing affordability?
It's difficult, right? So to be fair, as a government, we've done quite a lot in this area. Help to Buy, Lifetime ISA, there are a range of different things we've done. And by all means, by the way, we can always do more and we're always looking at those things. So government can do its bit from the fiscal side. The regulations, it's tricky. And let me explain why it's tricky. We know that if people borrow, and we had very good evidence of this in the financial crisis, if people borrow too much for their income, but too much compared to what their incomes are, if something goes wrong, the consequences for that person, family, community, and often the people who lent them the money can be quite significant. So we've got to be quite careful about changing those things too much. But what I'd urge the Bank of England to do, and I do whenever I see them and speak to them, which is a lot, is always to be looking at ways to make it easier for businesses to make their own business judgments about who best to lend to. So to give flexibility with responsibility, because ultimately, if they get it wrong, they'll lose the money, but give a bit more flexibility to businesses, allow them to use different types of data. So for example, if somebody can prove that they can pay, I don't know, a £2,000 rent, and they've done so for X number of years, that sort of information should definitely be included in the assessment. If someone can prove they're paying 17 bills all on time and they've done so for many years, that sort of information should be included. So I think what we've got to do is, rather than necessarily weaken a lot of the rules, which do have to, and as you mentioned, do change from time to time, but we've got to be quite careful. I would urge the regulators to allow the businesses, the banks and other providers to be as flexible as possible around the information that they use to make their commercial judgments on who to lend to. I think that is important.
Okay, that's a really interesting point. Let's focus on that a little bit more, because open banking, which you mentioned, in the UK has been, a kind of pioneer around that. Obviously, that provides new data, and often, for example, in the credit information market, when you make assessments of people's creditworthiness, it can be based on historical data. Open banking allows you to do current people's current financial circumstances. But how integrated is open banking into, for example, credit decisioning and other parts of the financial services? It feels to me there's lots of new companies that have come about, but I'm not sure how embedded yet into the different parts of the financial service system open banking is.
The answer is, it depends which business. So if you're looking at the traditional high street banks, they've definitely changed a lot of their processes, they've updated them, of course they do. But their assessment of things, to some degree, is similar to how they were assessing things many years ago. The beneficiaries of more data sharing are the new fintech businesses that have come in. Let me pick up small SME finance, right? Because I was in front of the Treasury Select Committee a few weeks ago. Don't rush to do it yourself if you're asked. It's not always the easiest thing. But I was up and we were talking about SME finance. Huge amount of discussion about how can we get more finance going to the right businesses. And they said, people complaining that banks didn't want to lend to them and various things. The banks say, it's because the regulations make it harder for us to lend to them. So we can only lend a certain amount. But if we can use open data to allow new providers to come up and provide that finance to SME businesses, that will reduce the cost of finance to small businesses, which enable them to grow more. That's what I was talking about in my speech. That is a very good use case, and that's what we're looking at. Mortgages is another one, but again, it's a bit different.
Great. The next question is around young people and their sort of how attractive financial services is as a career. The 1980s, 1990s, noughties, a lot of the most talented people were going towards finance. Is it still attractive now? I mean, you talked about entrepreneurialism. It seems like tech entrepreneurialism is the sort of sexy thing to go to. Do you worry a little bit about what that means for the talent pipeline to the city? So that's domestically, but also internationally, also making sure that we're a kind of global magnet for talent. The government's line seems to become a lot more strict on immigration relative to Boris Johnson. Do you worry about attracting also international talent to financial services?
I'll do the second one first. So, frankly, we're still attracting hugely talented people from all over the world. My worry, so I'm not worried about that, because frankly, in financial services, people are earning above the thresholds, even with the raised thresholds that the government's put in. I'm actually worried about it from the other way around. And I am worried that if I compare to when I left university going into the City of London, it doesn't appear to be as attractive a career to younger people as it appears to be now. And that's just, I've got no evidence for that. It's just my sense of things. I think that my problem with that is that still financial services is a fantastic career. It is a fantastic industry for this country. And ultimately, people can earn good money in it and very stable jobs in different parts of the country. I want British people. If you've got a fantastic industry, you want as many British people as possible to be part of that story. I think it's a problem if too many of those people aren't British, right? Because I think that then you end up with a difficult dichotomy with the public, because the people who are populating the industry and leading it, too few of them are Brits, right? So actually, I think we've got a problem in making sure that enough British people still see it as an attractive career. One thing that I've noticed, my sister hates when I bring her up in public, so I'll do it because it's quite fun. But my sister, who works for an American law firm, and she was on secondment to a very big bank, and she was struck that in effect, the lawyers were effectively better paid than their clients. I mean, not in all levels, but at sort of junior mid-level. And I thought that was really interesting. That was not the case 10, 15, 20 years ago. So I just noticed that as a difference. You know, we didn't talk about professional services, but our professional services sector is doing incredibly well. Law firms are the big four and others. They're also thriving at the moment, and they are intimately connected with the financial services sector as well.
So to coin a phrase, it's sort of British jobs for British workers in the financial services.
British jobs for British workers. Yeah. It's that thing of politicians. You're like, what's going to come out of this? I think it's a good phrase, Brian. It's a good phrase.
And then my final question before I open it up is about the sort of entrepreneurial journey, because it seems to me a lot of people think, you know, we've got very vibrant startup scene. There's lots of VC money going into it, lots of interesting companies, particularly spinning out of universities. Where the UK struggles is a little bit later on the journey, that entrepreneurial journey. So the kind of scaling up part. And also listing as well. There seems to be a migration away from the UK. So I'm just thinking about what your thoughts are around how you can help companies that start in the UK stay in the UK and go on that, you know, unicorn journey, as it were.
Yeah. So this morning I was hosting a roundtable in the Treasury with Frank Pettigrew, the Prime Minister's business advisor, who used to be sort of head of Morgan Stanley Europe, and we had, I don't know, a dozen businesses in the room talking about AI. We were talking about the impact of AI on professional financial services and various things. And a couple of the businesses, after the meeting, were talking to us about they are at Series C, so they're at that point where they're going to make that decision as to where do they end up, you know, if they're going to float, where do they end up floating? And they were debating between the US and the UK. And it's so interesting because tomorrow, with the Chancellor's hosting a discussion talking about this whole thing with some companies as well. And so we want to promote the UK to be a place to list. And we are already seeing in the last few months a real step change. I'll give you two stats. The FTSE this year has outperformed the S&P 500 in the US. Outperformed it. Secondly, once you strip out the big 7 tech companies in the US, which really drag everything else up, we've outperformed it by a lot. And the mood music you're even seeing in the media, what you're seeing from businesses, the phone calls I'm getting, the people that want to be involved, the people that want to come and see me and are desperately keen to see me about how quickly they want to list in London. That wasn't happening before. And I think it's not, you know, it's important that you don't over read these things. I think it's a combination of a lot of things, but I think they know they've got a government that's supportive. They know they've got a government that has ironed out a lot of the regulations and rules that are not working. They know they've got an ecosystem that is fundamentally strong. And I think for a couple of years we beat ourselves up. And actually this year we are we're very optimistic that we've really sort of turned a corner in that regard as well.
Thank you, Bim. Let's open it up to thoughts and questions from you. If you could say who you are, where you're from, that would be great. We do have a microphone. Will's got it there. So let's start with this gentleman here. And if you could be as pithy as possible, that would be great.
It's Joe Mays from Bloomberg. In your remarks, you talked about the importance of the culture of competitiveness in the city, and you mentioned the secondary growth objective, but you said you would be willing to go further.
Yeah.
What does going further look like? Does the secondary objective need to become a primary objective, and what specifically would you do? And just secondly, briefly, is it your expectation the government will be able to deliver another tax-cutting fiscal event before the next general election?
I'm just going to take a round because I'm conscious of time. So we will now take this gentleman front here.
Hi, Bim. You mentioned being a free market conservative, and I know you've spoken and written things in the past about sort of dangers of over-regulation. Where do you see things now in terms of, you spoke about some of the things that the government's done recently? Consumer duty came in last year. There seems to be a lot more regulation and compliance for smaller businesses to deal with. And so where do you see sort of things in the future in terms of the balance between protecting the consumer and economic growth?
And without being rude, can I just ask who you are?
Jim Clark, Bright Blue fan.
Right, great, excellent. Wasn't planned. Right, this chap here.
Hi, my name's Ian Lightbody, and firstly, as a Lightbody, can I congratulate the Shorthouse and Bright Blue for their first-class principles and hosting such a great event today. I'll keep it short. I actually have got a lot of things I wanted to say. I've come down from Glasgow today to specifically only found out about this event yesterday. I'm a victim of a bank of frauds and scams, so therefore I'm interested in what was mentioned earlier regarding current day frauds and scams. It means it's more of a legacy thing, which is carrying on. So what I'd say first, I'll cut to the chase. The BBRS, the Business Banking Resolution Scheme, I take it you're aware of that.
Very much so.
Do you believe it's fit for purpose?
Great. I like that. You were straight to the question. And then just the gentleman behind, 2 rows. No, I'm just going to take the next person. Sorry, if that's all right. 2 rows behind. Yeah.
My name is GJ Laura. I'm a private individual. Just wanting to find your opinion on, there's this apparent collision between BRICS and G7, how it's going to impact on what your plans are going forward.
Great, thank you. Some wide-ranging questions there, Bim.
Okay, so Joe, good to see you. What does going further mean? I think it really depends where we get to on the reporting on the objective. So we're going to look at that carefully, both PRA and FCA. But let me tell you what it doesn't mean. The Chancellor's already been clear, and I have as well, the sort of the naming and shaming thing the FCA has come out with. In and of itself, it's not the biggest deal in the world, but I think the reaction to it from industry, much louder than our reaction, by the way, from government, just to give you the real volcanic reaction from industry, I think really was a voice of frustration more than anything else. And so what I'm urging the FCA and all the regulators to do is, it's not just how do you report on the objective, but it's a mindset that everything they do, can they be thinking of growth and competitiveness? And I don't think necessarily the industry feels that shift has happened enough, but I think it's also important to give them time. They're big organizations, they're unwieldy, they're big like government. Give them time to show that they're moving in the right direction. In relation to regulation and whether we're on the right balance, I think that broadly, the pendulum has moved a little bit too far on the over-regulation. But what we're doing is, as I've shown in capital markets, we've streamlined, we're simplifying and making things easier, but it's a long journey. And what's also important is that you don't end up with huge lurches in policy either. Just because something isn't in the perfect place doesn't mean you sort of get rid of everything overnight. What you've got to do is take a look carefully, calmly, look and see how do you move things slowly into a better place. And that's what we're broadly doing. BBRS, the short answer is I don't think so. And I think that there's clearly a problem with a subset of businesses that are not well served by banks and by the system. It's a relatively small subset, but that subset still really, really matters. And that's why the BBRS was set up, to deal with that particular subset. And we are just going to have to think about how that subset gets better served. Some of the work we're doing on SME finance, I'm hoping specifically will target that group. And in relation to BRICS and G7, you can make a whole speech on it, I suppose. I think two things. The first is that if you actually look at the financial system, US Fed is absolutely critical because of the dollar as reserve currency for both BRICS and G7. So if you're thinking about finance, the United States is still absolutely pivotal importance. And so one shouldn't overread the sort of clash in financial services terms. I mean, we could talk about war and geopolitics and all the rest of it, but if we're talking about finance, one shouldn't overread that clash. The second thing is we've just got to be careful not to end up with sort of two competing financial systems. We're nowhere close to that today. As I say, the United States really is the Fed of the world to a large degree. But let's really not try and get to a world where you end up with two infrastructures, because that actually builds in a lot of fragility, a lot of difficulty. What's a lot better is you've got one set of rules, everybody plays by those rules, and people broadly get on, and their regulators and their central banks talk and discuss. That's the world we should remain in, and we should push back against people that want to divide the world between two financial systems. I don't think that's a very good idea.
Great, let's have some more questions. So I'm going to move on. This gentleman here.
Hi there, Lee Renders from NatWest. You talked about potentially taking further action from some of pension fund assets going into private markets or UK equities doesn't increase. Could you just provide a bit of colour on likely timing? Is that going to be Mansion House, re-election, etc.? And second question, again, you talked about democratising private assets to benefit retail investors. Obviously, regulation is part of that, but it feels like it's cultural as well. So if we look at the US, I think the equivalent is 58%, in the UK it's 18%. So how do you turbocharge that culture in the UK?
Great, thank you. The gentleman just to your left, Will, just there.
Thank you. My name's Sagar, I'm from Stonehaven. My question is with regards to the future of payments vision and the future payments review and the national payments vision, which I believe the government has come out that they plan to release before the summer recess period. Kind of given what you said about open banking today, would be useful to understand, where the government currently sit on that, if you're able to shed any more light.
Okay, great, thank you. And then this lady here.
Hi, I'm Francesca. I'm from the Association for Renewable Energy and Clean Technology, also known as the REA. The acronym doesn't really make any sense, but so I understand when we're talking about the future of UK finance, you could probably go on about it for days, but I would quite like to know your opinion on where sustainability and particularly green finance comes in with all this, whether that be bridging the private-public sector gap, what government can do, what you expect from the private sector, as I believe the private sector does have a responsibility to serve, and yeah, just a general thought on that, please.
Great, thank you. And then finally, this gentleman here.
Thank you. My name's Anthony Manchester. I'm from BlackRock. Related to the question from the earlier question on pensions, we look after the pensions of about 12 million people here in the UK, and we strongly believe that they're there to give people a decent retirement, and therefore a little bit worried about suggestions that they might be forced to invest into assets that they don't, their managers don't think that they're going to give them the best returns for the end investor. And on that point, have you looked at what you quoted a lot about the supply side, the supply of capital going into the UK stock market. But what about the demand? Because all our data shows that for the last 5 to 10 years or so, the UK corporate sector has been in balance, which suggests that it's not borrowing money from the capital markets to as much of an extent as it historically has been. And so to what extent has the Treasury looked at the demand side of the equation as well as the supply side of capital?
Good question.
Okay.
Bim.
Okay, I'll take the pensions ones together. I am not talking about forcing anybody to do anything. What we're saying is transparency will be quite an important lever. That's what we're talking about. We're not talking about mandation or forcing anybody to do anything. But I also think it's important to recognise that an integral part of the capital market is capital. You've got to have enough of it. So if you end up with a world where those capital outflows are significant, it's really, really hard for businesses there to raise what they need to raise. But we are not going to mandate anybody to do anything. In relation to the national payments vision, we're going to, that whole, what I was talking about in terms of open data, is all going to be included, but it will come out in the vision. But you know, I am very, very focused on it. So don't worry, it will definitely be there. In relation to retail investors, and you mentioned sort of how we're going to do that, I'll draw your attention to one area, which is work on what we call the advice guidance boundary, i.e. ordinary people getting financial advice. Britain is actually one of the least advised big markets in the world in terms of people having affordable financial advice, whether it be for pensions, savings, investments, etc. There are a lot of regulatory and cultural reasons for that. It's complicated, but we are working on it. In fact, I spent 2 hours with the team yesterday working on how we're going to move this forward in the coming weeks and months, because I think that that's a critical area in which, you know, you can have all the reforms in the world, but if people don't actually engage directly and they need the advice in order to do that, then you're not going to get anywhere. So we're very aware of that. And the point around sustainability, very good one. And you've shown me up because I should have included it in my speech. Let me tell you what I would have included if I had included it in my speech. I'd have talked about the need for consistent standards for finance. If you do not, at the moment, and someone was telling me this yesterday, there are something like 5 or 6 different overlapping standards depending on the different types of financial lending to different types of people in different markets. That means that finance doesn't want to touch it because they get worried about the moving goalposts. What we need is a consistent standard. We're working on it with my colleagues in the Treasury to make sure that once you have a consistent standard that aligns with international standards but is specific to the UK, because we're going to have different needs for finance than other countries. My view personally is that when we talk about ESG, I think that's been a bit of a misnomer. We should be thinking about the E, right? It's the E that we really need to focus on. And a lot of the S&G has clouded the core E. And I think we need to get back to that. And if we can get those consistent standards, we'll be able to finance things over the long term. A woman called Brian Marie Thomas, who's from the Green Finance Institute, said something to me yesterday where they've got I think they sponsored a report, or she was quoting a report talking about how if banks, financial institutions, and big corporates don't take action, the impact of known climate risks, so these aren't things that might happen, these are things that we know are happening and will happen, is significant in financial terms. So I do think the financial services sector has got that memo, but they do feel, I think, the need to have consistent, clear standards, and that's on us in government, and we're working to do that this year.
Great. I'm conscious of time, so we'll just have a very final round, but please make these questions very pithy. So 1 sentence, no embedded clauses. Right.
The man at the back is confident he will achieve this.
Thank you very much. I'm sure everybody in this room would agree with the idea of getting rid of bureaucratic, high friction, red tape and bureaucracy in the regulatory framework. But am I right in thinking there's no reason to be concerned that we'd be confident about the wisdom of removing regulation that protects consumers from harm?
Okay. What's your name, sorry?
Forgive me, Andy Agathangelo, Transparency Task Force.
Great, thank you. And then this gentleman here.
Ed Simpson, Finance and Leasing Association. One of the drags on investment in my market is the role of the ombudsman, whereby they adjudicate on the basis of fairness to the consumer, but that's out of kilter with other international jurisdictions where it's on the basis of whether it's in line with FCA rules and the like. Your predecessor was minded to look at that. So I wonder whether it's part of your further work you too would do.
Great, thank you. And then I've got a couple of questions online, so I'll just quickly do those as well. One is from Alex Brett, who says, Rachel Reeves is making an effort to butter up city executives. What are you doing to counter this? And the second question is from Stephen Middleton, who says, despite ongoing trust issues between SMEs and banks, why is the government ignoring victims of legacy wrongdoing, such as the Ulster bank fraud?
The last one, forgive me, I don't know the details about that. So forgive me for who asked that question. So I just don't know.
Well, they're not in the room, so you can escape that one.
So I don't know the answer, I'm afraid. I'll do them backwards order. On Rachel Reeves, well, look, the best way of knowing how somebody's going to behave in the future, politics, business, in anything, is judging how they behaved in the past and what their instincts are. Politics and government isn't really about people's detailed plans. I mean, it is a bit, but what it's really about at the top level, with Chancellor, Prime Minister, that level, is about people's instincts when things happen, because things are happening all the time. And I would argue that the evidence, when you look at Rachel Reeves and Keir Starmer, their instincts, these are public sector people. They have not run businesses and financial services or elsewhere at the level that the Prime Minister or the Chancellor have. Their instincts are not in the same way as pro-finance and as pro-business as the Chancellor and Prime Minister. You can say all the right things before an election, but what matters is how you will actually behave. And I think people really do know that their instincts are not anywhere like as pro-growth and as pro-business as the current leadership. But what people are doing is they're hedging their bets because election's coming. And I also understand that's how sort of businesses often feel they need to behave. In relation to the FOS, I have looked at it, I am looking at it. It's very important that we do not weaken statutory or elsewhere abilities of people to get justice when things have gone wrong. But we do need, going back to the question on environmental regulation, we just need to make sure that people are clear what the rules are. I think so making sure that everybody is clear what the rules were, what they are, is a very, very important thing. But we're not going to weaken people's right to get justice, even if it's gone a few years in the past, because that's completely correct. But we are thinking about making sure that we have to make those things as clear as possible, and we're working within the rules in order to do that. And the first question on consumer, it is really, really important that one does not get stuck in a dichotomy, which is more regulation, more complex, more and more of it is always good for consumer, and simplified, smarter, more sensible is always bad for the consumer. I think that's a wrong dichotomy. We will never do anything to expose consumers to unnecessary harm. But what that also doesn't mean is that nobody will ever lose money in anything and nothing will ever go wrong. Because no government can ever guarantee that, no business can ever guarantee that, and no human being can ever guarantee that. So I think that balance is something we're always trying to strike, going back to your question. But we are not going to open people up to unnecessary harms, particularly, I would argue, if I mention one thing to finish, on areas of fraud and scams, spending a huge amount of time trying to how do we limit this scourge that has just sort of exploded over recent years? How do we limit this? And if I was saying one area of harm, it's that. It's fraud and scams online. We're working incredibly hard to tackle that, working with the sector, working with others. And that is one area. If we can make a big difference there, it will help consumers across this country.
Great, thank you, Bim. And you were very kind to me with a very kind story at the start. I feel like I should reciprocate. Unfortunately, I can't think of any kind story. But I'm sure everyone would agree that you've got such a engaged.
I'm going to use that somewhere else. Actually, it's really good. I'm going to borrow that and steal it and I'm going to pretend it was my joke.
But I'm sure you'll all agree that to have such an engaged, thoughtful, and energetic minister championing financial services is a real plus. We're going to finish off just with the final words from Sarah Boone, who is the Managing Director for Corporate Affairs and Strategic Policy at UK Finance.
Thank you, Ryan. Thank you, the entire Bright Blue team, also to Morgan and Virgin Money. UK Finance is delighted to host this event, which I found exceptionally interesting. I hope you all have too. I've been particularly encouraged by the Economic Secretary's optimism about the future of financial services, and I'm really pleased to say that championing a thriving sector to build a better society is a goal we in the industry share with them. So obviously I'm going to say some good things about the sector now, but echoing what the Economic Secretary has said, the sector is fundamental to people's lives, and we are proud to promote it and the work that it's doing to support customers and businesses up and down the country. Our financial services make a huge contribution to regions and nations across the UK. And I'm going to steal one of Bim's lines, because the financial services sector is both one of the country's largest employers, providing highly paid, highly skilled jobs for more than 2.2 million people. And as Bim said, around 2/3 of those are outside of London. But it also contributes as an investor and a lender, delivering tens of billions of pounds in investment to help turbocharge regional economies, from tech startups in Manchester to transformative green energy projects in Teesside. Now our industry stands at a pivotal moment. London is the second largest financial sector in the world, and financial services are the UK's most successful international export. However, a bank-specific tax regime out of step with our global competitors in New York and elsewhere, as well as a constantly evolving regulatory landscape, risks the UK falling behind. So how do we at UK Finance think the UK can get on the back foot? Then this is where you should take notes. First and foremost, building on the success of our landmark Financial Services and Markets Act and Edinburgh reforms, we think that the time is now to go further, and that the government and regulators should continue to take a more pro-growth approach to regulation, whilst rightfully maintaining the high standards that set the UK apart and protect consumers. And we believe this can be supported by creating a new government competitiveness champion to review and tackle the burden of regulation. We feel this would send a really powerful signal that the government takes this issue seriously. On taxation, providing long-term certainty is essential for long-term investment decisions. And we believe that the government should publish a financial services tax roadmap, setting out its aim to bring taxes in line with other competing financial sectors. Looking ahead, innovation will continue to be a driving force in shaping the future of financial services, as Ben mentioned, which will foster a more competitive and dynamic sector. And private capital markets are a vital component of the ecosystem. And that's why we in the industry strongly welcome the work that the Minister and his colleagues in Treasury have done, their ambitious programme of reforms to reform our domestic capital markets. I was also very pleased to hear Bim on one of his favourite subjects, Pisces, which we feel give private companies greater access to investment and access to public markets, and we support. So finally, I look forward to working with the Economic Secretary and his colleagues in government on behalf of our members to champion competitiveness, innovation and dynamism in financial services. Thank you all for coming. We'd love you to join us afterwards for refreshments in our member area. Thanks all.